exciting and fast evolving quantitative finance led by from Quant Insider. This session will provide a comprehensive covering how quant finance has evolved with data science, learning, and algorithm trading, and introduce the major players in the industry, such as hedge funds and high frequency trading firms. Students will gain clarity on various career paths, like quantitative traders, researchers, and developers, and understand the difference between buy side and sell side positions. Design will also shed light on the recruitment process, the kind of assessment firms conduct, such as mental math, pattern recognition, and market simulation tasks. In addition, session will highlight the technical skills required from mathematical modeling and programming to applying machine learning in trading, as well as high impact project ideas that can help students build a strong portfolio. Lastly, the session will focus on bridging the gap between academia and industry, helping students transition from theory to real world application. It's a valuable opportunity for all finance and analytics enthusiasts to explore this dynamic field and prepare for potential careers in it. Over to you, Priyansh.
Thank you, Amit sir, for your words. Now, moving on with the session, let me present my screen. Mr. Bison is a trailblazer in the domain of quantitative finance, a space where mathematics, programming, and market insights come together to power the future of finance decision making. He is the founder of Quant Insider, a first of its kind platform dedicated to building a 360-degree ecosystem. I hope so I'm audible. Yeah. 360-degree ecosystem for quant finance and algorithmic trading. Through this initiative, he has mentored over 1,000 students and built a vibrant community of more than 1 lakh finance enthusiasts. A real-time trader and former analyst at Deutsche Bank, Mr. Bison holds a finance degree from Christ University and is currently pursuing FRM from GARP USA. He has delivered workshops and guest sessions at some of India's premier institutes, including BITS, IITs, and ISC Bangalore, making complex topics like statistical arbitrage, derivatives, and high frequency trading accessible to students. In today's session, he will demystify the world of quant finance, from hedge funds to proprietary trading tasks, and help you understand how data science, machine learning, and coding are transforming global markets. You'll also get insider knowledge about career paths in the space, the skill set top quant firms look for, and how you can bridge the gap between academic theory and industry practice. Over to you, sir. Tribhuvan, sir.
Uh, Thank you so much, Priyanshu, for the introduction. I hope I'm audible.
Yes, sir, you are audible.
Yeah, my voice. Yeah. Okay, guys. Let me just share my screen. Give me a minute. Is my screen visible?
Yes, sir.
Yeah. Thanks. So, can we just have a poll first? Like, how many are first year students, how many are second year students, and how many are final year students here?
So primarily there are pre-final year students only, like the third year
Okay.
students only.
Okay.
Yeah.
Okay. Okay. Got it. Got it. Okay. So before we start, I will just give you a brief about what we do at Quant Insider, and then we'll start with the presentation. So we started Quant Insider way back in October 2023. We started education platform. Now we have different business segments. What we're trying to build is a 360 ecosystem of Quant Finance. Inside that, first is education. Second, which we are now into providing algo trading solutions and trading technology solutions for uh, brokers, RIAs, funds, and trading desk. We also are in hiring services. We help financial services firms like hedge funds, trading desk, and investment bank to hire quant talent. We help them hire in hiring in the hiring process, and we are also into risk system making risk systems. So we provide risk system solutions to multi-strat hedge funds. So this is what we do at Quant. We have like different segments inside us, and today we are going to discuss about uh, basically what is Quant Finance, different kind of jobs in Quant Finance. We will learn about quant industry as a whole, buy side quant jobs, sell side quant jobs, how the recruitment process looks like, how to prepare for one, how to prepare resumes, what kind of project you should make. So we'll be going through all that. Okay. So yeah, what kind of people work in quant finance? Okay, so we will have people pursuing PhD in STEM, people in doing physics, people doing masters in financial engineering, maths and stat majors, CS undergrads, CS postgrads, economic grads. You will see very less pure finance majors, like close to none, working in quant finance until unless they have done a master's something more STEM oriented, like financial mathematics or STOL. A pure STEM major you will never see in quant finance role. It's very like rare to see those. So we'll just start with a meme. If you know this meme. So okay, what are buy side organization, what and quants? So can we have a poll that how many people know what is a buy side in finance? Do you know what is a buy side in finance? Can we just have a show of hands who know what is buy side in finance? Okay. So okay. I don't think anybody knows. Okay, Priyanshu knows. I think other don't know what is
Uh,
a buy side in.
sir, like
Yeah.
I don't know what buy side is, but I can make a smart guess. Like buy side sounds like an organization or the party which buys stuff. That's what it's
Okay.
evident from the name.
Okay. Okay. So buy side
Because
is
in any
basically okay. So buy side is basically uh, uh, people who raise money from investors and then trade or invest on behalf of them. So your buy side is private equity firms, venture capital firms, your hedge funds, your trading desk are buy side. Okay. Again, if it's HFTs are not generally considered buy side, and even market making firms are not considered buy side. Firms which purely do like trading just for making profits, those desks are called buy side. But again, inside that, if somebody is doing HFT and market making, then again those cannot be considered buy side. Okay, so let's have a look at the structure. What are the things? Okay, so this is we are looking at is the host. What are the things inside buy side? Okay, asset and inventory management. So pure advisory, again this is part of sell side. In a way it's a sell side business, pure advisory, in which basically you generate trading ideas or investment ideas, do you do research, and then you go give that research to a client. You're just giving pure advisory. In this kind of a model you just have reputational risk, because if your model doesn't do good or your research doesn't do good, it's a reputational risk on you. And second is model risk. If model there's a flaw in the model or there is some discrepancy that comes in the model, again that's also a risk, and you can lead to loss of client. And again you don't need any capital, because you're not trading or investing, you're just giving research and trading and investing ideas. Then we have non-discretionary. Again it's an advisory business, plus it, but with advisory you also give you execute on behalf of for a client. So you will give the trading idea and you will execute the trade on behalf of the client. So in this business basically it's a fee based business, what we call as RIAs in India. And then it's a pure advisory plus operation settlement. Again you don't need any capital requirement, because again you're not trading your own capital, you're just guiding the client and trading or executing trades on behalf of him. Then you have discretionary ETF and QIS. Okay, so in this you are managing clients money. Okay, it's a fee based business. You are managing client money. And QIs are particularly quantitative investment strategy teams are part of a lot of investment banks QIS teams, which make trading and investment models for their clients. Again, uh, here you have model risk and no capital requirement. Then your principals. Okay, principals are basically hedge funds and portfolio hedge funds, you can say, and other kind of buy side firms who are managing their own money as well as their co-investors' money. Okay, so you will also invest your money and you will have also your co-investors' money. What that we call as principal. So all the risk is taken on your own capital, and that's why you need your own capital. Then we have prop trading. So in this, basically, I think it will take some time. We will come back to it later. Okay, let's move to the next thing. Yeah. So yeah. So what are the education qualification you should have for these kind of stuff? So if you want to stay in pure advisory, non-discretionary on ETF and QIS kind of a thing, having a CFA MBA with a very strong maths background, like you have done an engineering in undergrad and then you do an MBA or a CFA, and you should have very good understanding of machine learning ML with good software ability, like software knowledge and coding knowledge. You can go for these roles. But if you want to get into pure principal prop trading and QIS, having a STEM math, STEM background, stat ML attempt, and high performance computation, knowledge of high performance computation. Okay. Any questions till now? Hello. Any questions, guys?
I
Hello.
think we don't have any questions as of now.
Okay. So yeah. Sorry. So this is what a front office of an investment bank looks like. This is the structure of a front office of an investment bank. Okay. So we have middle office, back office, and front office. Okay. Back office is basically your IT team, your operations, legal, and finance. Okay. Basically you do reconciliations and trade settlements and everything. Sorry, uh, dealing with old data and then doing legal stuff, operational daily operational stuff of the bank. Then you have middle office. In middle office you have risk IT, you have independent price verification, you have risk management team, your risk controller including monitors and so you have quant working in risk management, risk control and including model risk, and then you have regulatory capital. So in all these three you have quant working. In risk management you also have model validation team. Here also you have model risk teams and regulatory capital. So here you have controls: risk management, risk control including model risk, and regulatory. In these departments you will get mid, what we call as mid office quants. So in this you get risk controls, basically your market risk quant, your credit risk quants, your operational your you can say model validations, particularly model risk and everything. You do have sometimes risk quant in front office as well. So it depends how you which part of the business you are in. Then you have front office team. Okay, then you have front office IT. Okay, the teams which works on the infrastructure and tech part for the front office. Then you have market side. Then you have the client. So we will start with, okay, so this is the client side. Okay, so let's say, so you have client side. Basically client can be, in case of investment bank, it can be someone like let's say Tesla is the client of the investment bank. Okay, Tesla is the client. Tesla, so client will directly talk to the sales team. Okay, what we call as sales team. Okay, the client will talk to sales team. Sales team will communicate all the things required for the client to structuring and QIS team, and then this team will build the product for them, and then then the trading and financing team is here, and then you have XVA. So let's take an example to understand it in a better manner. Okay, so let's say I am okay, Tesla is a client. Okay, and Tesla wants to Tesla wants to hedge its interest rate risk. Okay, like it has taken loan from somewhere and it has the risk of interest rates going up. Okay, the rate of loan going up. So Tesla comes to Goldman Sachs. Okay, and it talks to the sales team that we have this kind of a loan, and we want to hedge the interest rate risk. Okay, the sales team will go to the structuring team. Okay, the structuring team, and then the structuring team will structure a trade for them. So it can be an interest rate swap. Okay, let's say Tesla is paying a variable interest rate. Okay, variable interest rate basically is the interest rate which changes with time. Okay, interest rate can change during the period of the loan. Okay, so Tesla has taken a variable interest rate loan, and then it goes to Goldman Sachs, and this we have a loan interest and which is a variable interest, and we want to hedge that risk. So structuring team structures a trade on interest rate swap. Okay, so what will happen in interest rate swap? Tesla will be paying a variable interest rate and they will be getting a fixed interest rate. Okay, they're getting a fixed interest rate to hedge the risk. Or it's easier to understand is that Tesla has taken a fixed interest rate or loan at fixed interest rate, and it goes to JP Morgan, sorry, Goldman Sachs, and it is an interest rate swap, and it pays fixed, and it gets a variable interest rate. It can be structured both ways. Okay, and so this way the structuring team build financial products for their client, and it can be much more complex products. It can be credit derivatives, it can be interest rate swaps, it can be CDS, it can be currency related products. It can be like we have variety of exotic derivatives out there in the market. It can be Asian options, exotic options. We have lot variety of products which is done by structured team. Okay, and then we have QIS teams. So QIS teams are basically very similar to buy side firms. So what happens in QIS role are basically you are building trading product, investment products for your clients. Okay, so inside QIS teams, you have a lot of different sub teams. You have options research team, you have ML, you have equities team, you have you have teams which are working on ETFs. They build customized ETFs for their client to hedge a certain risk. They build specific risk hedging models as well. They build customized ETFs particularly and other similar products, and they build indexes for their clients to track their performance and other things. So they are much more similar to buy side in terms of that. So they directly work on research in trading and investment models. And then you have trading and financing team. Okay, so let's understand what financing team does. Okay, so let's say again we will take a Tesla example. So how many of you know about Tesla's deal of Twitter? Like Elon Musk bought Twitter, right? You know, right? Elon Musk, yeah, yeah.
Yes, sir.
Yeah. So when Elon Musk bought Twitter, he didn't pay everything in cash. What he did was he pledged his Tesla shares to different investment banks and took funds against that and then bought Tesla. Oh, sorry, Twitter. So this is what happens in financing team. What you does is you give your shares, or it can be bonds, you give them a security, and against that you take a loan. It is what is financing for a certain business purpose. And then we have trading team. Here again, trading team is also an electronic trading team. Here we have people. Here we also have quants who work on basically libraries, building in basically execution systems and all for traders, and trading traders sits here. Then we have XVA, CCRA. It's the same thing. XVA you call it, CCR you call it, CM you call it. It's a basically a counterparty credit risk quants. So basically, what happen is that you are in a certain trade, or you are a central counterparty. Okay, so so what you do is you analyze against whom you're trading, if what kind of risk they have, are they good enough to take that trade or not. So and even what are the current positions on which what credit risk you have. So XVS done do that. Okay, then we have treasury team, and then you have collateral management. So when you trade derivatives, right, when you trade derivatives in the market, when you trade derivatives in the market, you always don't keep cash. Sometimes what you do is you can keep cash, as well as you can put something as collateral. Like I said, you can keep bonds, you can keep any any equity in the collateral, and then take a margin against it. Okay, take a margin on it, because for trading derivative you need margin. So you need collateral management for that, because you put something as collateral, take margin on it, and trade it. And Then we have market side again. Here we have market side. So this is what a structure of investment bank looks like. So you can ask me question if you have any on this particular thing, because it will help you understand how and what kind of controls you can get in different parts of the bank. Hello? Anybody have any question? Lakshay is asking, should we participate in WorldCon competition? Yes. Actually, I would say please participate in WorldCon competition. IQC, which is happening, the registration already started, and it will start in June, I guess. How much I remember. Yeah, you should participate, and I would say try to win it. even I would say participate in other competitions done by other firms like AlphaGrab does Alphaverse. Then you have IMC Trading doing its own competition. You have a lot of firms doing these kind of competition. I would say encourage to participate in all of them, because what happen is, again, when you win these competition and when you are in top 1% of these competitions and results, you do get you might not get internship at the same firm, but if you put in that resume and give it that resume at different firm for internship, it will help you a lot. Even in job application, when you apply for a job, it will very helpful, because it highlights that okay, you have won certain competition, that may you understand the market, you know how to build stuff. So these competitions are very helpful. I would encourage to participate in those competitions, and like at least come in top 1, top 2, top 3, like some kind of a rank or something. So it's very helpful in getting initial jobs and internships. Any more questions, guys? How can we target content finance roles? Okay, so we will talk all those things later. I was asking, okay, that particularly to the slide which I was showing it, particularly that if you have any questions. Okay, I don't think so anybody have question on this particular thing. Okay, then we will move to the next slide. Okay, so okay, we'll start with this. So like I said, trading, sales, and financing. Okay, so this is what a front office looks like. Front office is where deals are actually done and risk is taken and managed. Okay, and then you have electronic trading team here. Okay, so in trading, what is basically happen is execute trade. So it trading at investment bank is not same as trading at a hedge fund or a buy side. Okay, in investment bank, most of the time what you're doing is you're doing execution trades. Okay, so let's say you are Goldman Sachs and your client is, let's say, ICICI mutual fund. So what will happen is ICICI mutual fund will come to you and say, okay, I want Reliance shares at this particular price at this much quantity. I want 1 lakh shares of Reliance at this much quantity, like at this price. So your work as execution trader at JP Morgan is to get him the best price for those 1 lakh shares, like the best pricing. Like he will give you certain quote that this the price range should be at this to this, like the share should be bought at 20 between 2500 to 2520 rupees, in this 20 rupees gap or 10 rupees gap or whatever it is. It will give you a range and it will ask you to execute trade in that range and get those 1 lakh quantity. So you what you will be doing is execution trader, manage product inventory and risk manage client exposure. And even you, if you're working in exotic derivatives team, then you will be dealing with exotic products like Asian options, uh, you can say look back options, structured products, and all those things, even floors and pallets and everything. So you have different products inside that. So you, basically, the major work is execution trading. So you're not focused with buy side portfolio managers or quant trader who may execute their own trade, especially exotic ones. So if you have seen movie Margin Call or Rogue Trader, so Paul Betty from Batten from Margin Call and McGeorge from Rogue Trader are basically what we call as execution trade if you watch these movies. Okay. Then we have sales team. So sales team work is basically bringing new clients. Okay. So it can be clients for their different products. It can be client for the QIS team. It can be client for the structured teams. It can be client for the prime brokerage business. So it can be for execution and everything. So you have different business segment. For that, the sales team bring clients. So if you watch the movie Wall Street or Wolf of Wall Street, so Leonardo DiCaprio was basically what you call a sales guy in Wolf of Wall Street. Then we have financing thing. Like I told you, part of trading and financing, you provide collateralized loans. Like I said, Tesla's example, you Tesla will give you certain Elon Musk gave his Tesla shares as collateral, and I took a loan against it. That's what financing team does. And then you have electronic trading team. So electronic trading team has mostly replaced the job of execution traders. So you have a lot of quant developers and quants in this team. Okay, and even but originally the sales team establishes the client relationship with corporate clients. Any questions, guys, on this? Any questions, guys? I don't think so. Okay. Then we have like a structuring and QIS teams. Okay. Again, we have quant working in these two departments. So, like I said, they create original products that require some sort of hedging or replication. Okay. So most create state derivatives or structured bonds like derivative enhanced coupons. So you can have options on bonds. You can have floors. You have different exotic products. So that was structuring team builds. So they build it, like I said, creates bespoke on package products for client originated by sales or as a part of investment banking transaction to be sold to back or risk managed by trading. Okay. Hedging, if necessary, is done by trading using models built by quants. Okay. So their main goal is to fulfill client risk, credit risk or market risk, capital release, tax efficiency. Often they rightly work with sales and clients because they are building the product for sales and clients. Okay, and various structures with. So if you've seen movie Big Shot, so the Christian Bale he was working. Uh, a lot of people were working with Christian Bale. So though in the Big Shot were structurers. Okay, if you remember. And then quantitative investment strategy team, like I said, this is the most in it is the one of the department which is closest to buy side experience, like working operations similar to buy side firm. Okay, so mostly you create equity linked products. Okay, you will be replicating portfolios, creating indexes. Okay, so you will be creating custom indexes, and then you might be creating ETFs for the client, and similar products based on client requirement. Also, uh, you can be creating something. Let's say an example. So let's say you will be creating an industry specific ETF for a client, or you can be creating an index just for let's say a client has a portfolio of different stocks from different industry and different sizes, and but he don't have a benchmark to against it. So the bank will create a industry benchmark or an index for them in the industry index in the QIST. And then this is what a hedge fund structures look like. Okay, so if you see, we have again front office, middle office, and back office, and then we have a whole IT team. Again, back office, operational, legal, and finance. And then we have risk management team, and then we have market side, investor side, electronic trading business, pods, sales, trading, treasury, and collateral management. If you remember, here in terms of investment bank, we had sales, right? Sorry, clients. Now we have investors here. Okay, so we are taking money from investors and we are managing money from them. So we have investors. Again, the sales will guy will talk to investors. Sales basically is relationship managers you have in hedge funds. So if you remember, a very basic example, that even if you have account at ICICI bank or some other bank, you get your relationship manager, right? Same way we have RMs and sales guys here who directly deal with investors, who talk to investors, give data, give presentations and everything, even marketing material to the investors. Yeah, Priyanshu.
So we had one question from one of our students. We want you
Yeah.
to explain what is hedging.
Okay, hedging in basic simple terms is that let's say you bought a stock. Okay, you bought a stock. Now you have fear that the stock can go down. Okay, so you can hedge it basically by buying a put option. Okay, So what you're trying to do is that if stock goes down, you are hedging your risk of the stock going down. So a hedge is basically let's can we get a whiteboard here in the Teams? Is it
I don't think there is a whiteboard feature over there.
okay? Okay, I should have.
So one thing you can like share your screen and open whiteboard on your desktop. That'd be fine.
Yeah, let me just check if I can do that. Give me a minute.
Yes, sir, there is whiteboard in the app sections. You can see
Uh,
it in the top apps, and there is a whiteboard, notepad, forms.
Wait, let me just check. In the app section, I cannot see app section here.
So it's right on top of the window. Like in the Teams section, if you open, there is an app section over there. There's a whiteboard option.
Let me just check. Actually, didn't join from the application. I've joined it from web. So I think that's why I'm not able to say it. Okay, I don't think so. I can see it. Let me just check if I can do it from my own whiteboard. I will open whiteboard. I think yeah. You are you able to see anything? A whiteboard you able to see?
Yes, sir, we are able to.
Yeah. So let's say you have a position. Okay, position A. Let's say you have position A, and then let's say you bought a stock. So it is long stock. Okay, buy. You have bought it. Okay, you have bought it. Okay, and then you buy a hedge. Okay, hedge. Okay, hedge. Zero. So a perfect hedge is when, so let's say change in stock delta, change in A plus change in B, okay, should result in your zero loss. Okay. So basically, let's say your stock moves up. And let's say you bought a stock, okay, you've bought stock A. Okay. The stock falls down and you've bought a hedge, like put option to hedge it. And so the put option will go up in price when your stock falls. So the loss by this stock and profit by put should result in a zero loss. The change, the net change should be zero in terms of your P&L. That's basically what we call as a perfect hedge. So what we're trying to do is we are covering up the risk. Am I able to clear it, or should I use a like more detailed example? Let me know.
I think
Yes, sir,
Nikhil
clear.
asked that question. If you can specify if
Yes, sir, I
it's clear to
understood it.
you. Okay,
Hello.
cool.
Yeah. Is it clear, or should I explain with one more example? Hello.
Yes, sir,
Hello.
I
Yeah, sir, it's
understood it.
clear.
It's clear, right? Okay. 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 Just okay. So we have invest, like I said, we have RMs or sales guys who talk to investors, who give them reports and everything. Then we have pods or portfolio managers here, right? What pods in the sense, like if it's a multi-strategy hedge fund, you can have different pods like macro trading team, options trading team, fixed income trading team. Then you have equities team, systematic equities team. So you have different, it can be different pods if it's a multi-strategy hedge fund. And if it's a single type kind of hedge fund, then you can have portfolio managers. Like here you're replacing QIS teams or structuring team with the portfolio managers. And then you have trading team, treasury team, and collateral management. Again, collateral management will be there when you're trading derivatives. So when you're trading derivatives, you need margins. And usually people don't give cash, they give collaterals to get margins on that. That's how you have collateral management here, who do all the collateral management. And then treasury is the where you have all the money is there, your treasury funds treasury. And then you have electronic trading team, where you have a lot of quant developers and quants building execution systems and execution algorithms. And then you have markets, risk management, like similar, like you have risk quant setting. Example, let's say the last traded price was $101, and your theoretical value based on your model is 100. So the the bid is at $100.50, and the ask is at $100.50. You have a huge deviation, right? The wider spread due to deviation. The spreads are wider. It's $1 spread. And the next thing is you have to think about confidence interval. So how you adjust your spread dynamically based on confidence interval. So you can use a statistical measure like standard deviation or historical volatility estimates to quantify your confidence intervals. So if you have higher confidence interval, you will have a narrow confidence. It will lead to narrow spread. And if you have a lower confidence interval, that means if you have higher confidence on your theoretical value, okay, you have higher confidence, that means you will have a narrow confidence interval. Because of that, you will have narrow spreads. But if you have lower confidence on your theoretical value, that is correct, then you will have wider confidence intervals, and it will lead to wider spreads. For example, let's say for a stock with high confidence and narrow confidence interval, the bid will be 99.95 and ask will be 100.05. That's hardly a $10 spread. But for a stock in which you have low confidence that this is the correct theoretical value, you will have a wider confidence interval. You will have a wider range. That in that case, the bid will be $98. The ask can be $102. The spread is $4. It's much higher here. Next thing is how you react to the market event. So you have to keep adjusting your quotes, bid and ask quotes based on economic and unusual market conditions. So the methods can be pause your quoting when or widen. You have to widen your spreads before any impact news. So if let's say a stock is there whose earnings reports are coming today, in that case you will keep this bid ask spread very wide, because that day the market can be very volatile. And once the volatility, the results are being announced, the stock has become stable. After that, you can start requoting normal spreads. Any questions, guys?
No, sir, we don't have any questions as of now.
Okay, okay, okay. Okay, then we will come to sell side controls. Okay, till now we discussed the buy side structure, even we discussed sell side, but now we'll go into sell side controls. Okay. So sell side control and activity classification. So you have front office quant, you have model risk quants or model validation quant, risk quants. Okay. So this is what an interaction of a quant team looks like inside an investment bank. Okay. So you have front office quant, risk quant, model validation quant, and regulators here. Okay. Just give me a minute. I will just drink water. Give me a minute. Yeah. So front office quant. Front office quant develops, deliver, and support official pricing softwares and develop. So they deal with things like derivative pricing models, QIS schemes like we discussed before, structuring, and also everything happens in front office. They do in-house implementation of market standard models. They sometimes build original models, entire original models. They deal with IT integration and model integration in the system. So whatever model has been built, it will get integrated to the system. And they also deal with risk regarding usage of model for risk management. Okay, and then you have model validation team, risk team. So again, risk team's work is to build model based on the regulatory requirement. Okay, so some in banks we have something called as Basel norms. Okay, so internal models are built based on Basel norms. Okay, so the risk team builds internal risk models, implement those in softwares and everything, and that once the risk model is being developed, it goes to the model risk QA team, okay, and model validation team. They will check the model, they will validate the model, based on regulatory requirement, grant a license to use internal risk model. Regulator have a certain requirement that you need to fulfill if you are using your own internal risk models. So the risk models will go to model validation team. They will check all those models and give the approval. Same way front office teams develops a model. It goes to their risk modelist team. They check the model, they validate the risk models, and then again approve it. Basically, model validation team deals with front office, deals with the regulator for front office and risk QA teams on behalf of them. And then risk team and front office content agrees on risk management matters and the implementation of risk management in the front office. So pricing problem. So pricing problem is one of the most important problems at an investment bank's quant team. Because they do a lot of pricing of derivatives for their clients and even for mark to market and in OTC derivatives and the things. So you have certain observable parameters, you have some unobservable proxies, you have today's market data, yesterday's market data, you put it in a pricing function and you get a certain attributes here. Okay, so let's say first principle is arbitrage free pricing that we do. Okay, so mostly relies on today's market data, but require historical data, recent price for part dependent options, or just most recent resets for interest rate swaps. So basically, you have certain observable parameters. You have today's data, yesterday's data, and you put it in a pricing function, and you get a uh, certain values outside. It can be value, it can be PNL, it can be option Greeks, it can be scenarios. Your PNL attribution, PNL attributions. And yeah, Priyanshu.
Can you please explain a pricing function? Like, what is it? Is it an algorithm or what is it?
No. So it can be, let's say, you have a volatility surface. You are building a volatility surface. Okay. So it can be you want to price options. You have volatility surface. You will take certain you will take volatility from the volatility surface and put it into the pricing function to get the value of the option. So pricing function is the formula in which you put the parameters to get you put certain inputs to get unobservable values. Okay, so it, like I said, it can be Greeks, it can be PNL, it can be value, it can be scenarios. So it's a formula, it's a function in which you put observable values to get unobservable values.
Yes, sir.
Okay, then we have market front office queue. Again, we have different roles inside the front office quant analyst, quant developers, strategists, and quant researchers. Okay, so quant analysts again do research, design, develop, and support. So they build pricing models, trade objects, and life cycle logics, market data objects, and model calibration of components. Okay, so model calibration is nothing but when you build a model, right? Let's say you build a option pricing model to predict what should be the correct price of the option, and then you have and then you also have market price data, that market is giving a certain price for option and your model is giving a certain price. So what you do is you calibrate the model using market data to get to so your model price and market price is similar. Okay, you calibrate the model, and then you have called developers. Okay, so developers are basically, yeah, Pranshu.
So I received a question from one of our audience. So what he was asking that in India, the crypto trade is not yet regulated, right? So how to deal with that?
I don't know. I'm not a crypto guy. I never dealt like in traded crypto. So see, I'm not the correct guy to talk crypto and stuff and all. Sorry.
Oh,
Yeah,
okay, fine.
I'm not a crypto guy. It is a lot of tax implication which I don't like. So yeah. So implement so quant developers can do two things. Okay, can do two things. They implement very low level infrastructure and component of quant libraries, because firms have their own internal libraries, like people use NumPy, pandas, which are open source libraries. Firms have their own internal libraries which are built by quant developer, which basically deals with numerical method formulas, pricing models formulas. So you don't have to code the same formula again, you can just call those formulas: vectorization, parallelization, distribution, graph technologies. So all these libraries are built by QAs. Okay. Then the second thing quant developer can do is they help IT team deploying the quant models. Okay, the once quant model is built, quant developer help the IT team to get implemented inside the whole infrastructure and system. Okay, and then we have quant researchers. Okay, so quant researchers don't build pricing model, but use them to build trading strategies. Okay, so pricing model are built by quant analyst. Quant analyst build those models, and quant researcher use those models to build trading strategies, investment strategies. Like I said, they are quant researchers are mostly part of QIS teams. But if you even you have quant researchers even in pricing teams as well. Like JP Morgan has their exotic derivative team in which you have a lot of quant researchers. So you do have a quant researchers title as well sometimes, but major quant researchers are in QIS teams. Okay. And then we have strategists. Okay, so the strategists implement the business tools and pre-trade and what if analysis and market data marking, exotic structuring. So they are closest to the business and even closer to quant developer team. And then we have risk quants. Okay, so what does risk quant does? So they are basically go-to person for regulatory requirements and understanding regulatory requirements. So basically you have certain regulatory requirements which translate to be math. So whatever regulatory requirements are there, so the risk team convert them into mathematical models and they build risk model based on the regulatory requirement like I told you before. Then they do data analysis and time series modeling. Okay, so it can be non-parametric simulation, parametric estimation, simulation methodology, risk factor mapping, and proxying and synthetic series. So they do data analysis, time series modeling, and then risk-specific pricing. Like I said, we have standard methodology like data, gamma, vega approximations, and then we can have front office prices. What if Monte Carlo PDEs for partial differential equations? So they do a lot of scenario analysis as well and delta vega gamma approximations as well. Any questions till now, guys?
No, sir, we don't have any questions as of now.
Okay. I will not go into this. It will be very long. Let's move on for this. Yeah. So what are the skill set for front office quant? Okay. So if you want to become a quant, right, quant analyst, okay, so you need very good production level C++ and Python. Okay. General Python level, Excel, VBA, 3, net, .NET, like C hash and C hash and F. Then you need like numerical method including understanding of Monte Carlo and abstract math where should be very strong because you again work with models. Here also you use a lot of models. Then statistics and ML is not that much required. Abstract product knowledge, you should have very good product knowledge. What is the product you will be designing? Then concrete product knowledge and market knowledge, and then communication and writing skills are required. Uh, and understanding regulatory matters a bit level because you deal with a lot of products, so you need to know some level of regulatory requirement for those products. Then you have quant developer, so you should have general Python as a production level coding, Excel VBA not much required, .NET not much required, abstract math not required, numerical maths, these all these things are not required. Product knowledge you need again because you will be coding those products. Product knowledge, concrete product and market knowledge is required. Communication and social required. Writing skills not that much required. Regulatory matters again not much required. If you are a strategist, okay, production level coding is not required because you never code in production. Quant developer does it on behalf of you. You need very good Python skill because a lot of stat research is done in Python. So you need very good Python research. Excel VBA is required. C hash and F hash is required. And abstract math is required. A bit numerical math including Monte Carlo. Statistics and ML is required because you do a lot of statistics and ML implementations. Product knowledge is required. Concrete product and market knowledge is required. And writing skills are required. And understanding of regulatory matters again required. And then okay, and categories of quant roles: quant researchers, quant risk management, derivative pricing, structuring, and structured product and quantitative analysis. These are the broad category of jobs inside investment, like quant jobs. Broad category, again, it can be mixed based on the firm structure. Then what are the things you require? Okay, uh, like if you have studied all these things, JE itself, I guess calculus, linear algebra, probability theory. Okay, then statistics, stochastic calculus, Brownian motion, stochastic process, ITOS process, ITOS lemma, basically continuous time martingales, Markov process, diffusion process, uh, stochastic differential equation, Grist-Nov's theorem, jump diffusion models, Monte Carlo Levy model. In statistics, Bayesian statistics, time series, regression analysis, confidence intervals, and all these. Numerical method, root finding method, Newton-Raphson method, interpolation, extrapolation, numerical integrations, ordinary differential equation, partial distribution, and Monte Carlo simulation. Then optimization, time value of money, financial mathematical concepts. These are basic questions. These are questions generally asked for senior controls at investment banks. These are very high level questions, so we'll not go into this because these are not asked for inter-level controls. And then what are the strong pillars for a profile? Okay, so you have resume, project portfolio, and keywords. So resume is, again, you should have your resume should be very ATS, with a good ATS score, and keywords are very much important. And then you should have a very good project portfolio to show that you are very much interested and you have very much interest and intent to work in the industry, and you are willing to do the dirty work of learning the stuff to implement it. So some of the keywords that can be used for equity derivative control at an investment bank for this particular profile, some of the keyword that you can put is strong mathematical background, probability theory, statistics, numerical math, stochastic calculus, machine learning, Python, C++, MATLAB, SQL, analytical skills, technical skills, then Greek analysis, models, Heston, local volatility model, calibration, stochastic. So these are the few keywords that you can use in your resume if you're applying for an equity derivative quant at investment bank. And then so these are the few keywords. Then what are the few projects you can make? One is pair trading strategy. You can build market trading strategy based on co-integration of two stock, or if you don't want to use co-integration, you can use k-mean clustering method using machine learning, or you can so co-integration is very basic model. Then you can use market making simulation. You can build a market making simulation. You can simulate market making strategy in a market environment, develop algorithm in which it manages the bid and ask spreads, and implement order execution strategies and inventory management. And then you have volatility forecasting models, which you can work on, develop a model. You can build something like GARCH, SVR, stochastic volatilized, and you can build these kind of models. Then option pricing models like Heston model, Sabre model. You have to justify why you choose this model for this particular product and how you are capturing the smile and skew observed in the real market options market, and how you implement it. You have to do calibration and how you calibrate that model. You can also build something like factor modeling kind of a thing. Factor modeling projects are very much relevant if you are applying for firms which use machine learning algorithms and quantitative models for investing, who use factor-based research and who do factor investing particularly. So factor modeling you can do for firms, and you can apply. It will be very much helpful if you are applying for firms who do factor investing. And then you can use check machine learning for trading kind of a thing. You can apply machine learning model to predict stock price, and it's a very basic model. Again, not much value, but again, it's good. It's a good place to start with. Yeah, I think we are done, Priyanshu. Hello, hello.
Yes, sir.
Yeah, I think we are done. We can have a Q&A.
Yeah. So now we are opening the floor for questions. Any one of you have any questions regarding quant or finance in general, or any terms that you didn't understand, you can ask to sir right now.
Hello, sir.
Yes.
Sir, how can we target the companies and what are the companies which offer entry-level roles?
So there are a lot of firms which hire for entry level roles. So first thing you can do is uh, uh, work or like to prepare for interviews. Like I said, be very good with solving mathematical puzzles, brain teasers, and probability statistics based puzzles. And one is that you have to start focusing on. Second is build a very good strong project portfolio. Third is start reaching out to people who are working at these firms to get referral or to know when job openings are there. Because see, a lot of firms put job openings on their platform, but they never hire from there. So what you have to do is that you have to start reaching out to people who are already working for these firms. Second is know a few headhunters who are already there in the market. So there are a lot of headhunters who hire on behalf of a lot of firms. We hire for few firms on behalf of them and for entry level and mid level roles. So there are a lot of headhunters out there. You can just search on LinkedIn like uh, high frequency trading recruiter, quant research consultant. These kind of titles you can search. You will get a lot of people with these kind of titles. Okay, so these are headhunters. Try reaching out to these headhunters as well. Yeah, Priyanshu.
Sir, can you share some learning resources also?
Sure. I will give a drive access. It has a lot of material. You can give it to all the students. Any more?
Any more questions?
I don't think so. Anybody have any question?
Hello, sir.
Yes.
Sir, as an retail investor, how can we approach algorithmic trading?
As a retail investor,
Yes, sir.
see, as a retail investor, you can see if you know how to code. What you can do is you start using brokers API. So Dhan provides its own API, Fires provides its own API, and Zerodha is its own API. You can connect it with directly with your Python, and then you can build strategy and connect with that and start using it, because these API product you data as well. Another thing which you can use is you can use third-party algo trading platforms. So let's say we have our own algo trading platform. I can show it to you. I will just share the platform screens with you. So can you see the screen? Okay, can you see the
Yes, sir.
screen? So we have this our own platform. So first product is create strategy using AI. Okay, let me just log in. Okay, so you come to Phoenix and you create strategy. So in this, we create, it's basically AI model in which you put a prompt. Let's say here I put a prompt called create a trading strategy with by simple prompt. Okay, so the whole platform will create the strategy, and then you can select the instrument from here. Let's say Adani. Okay, and then you can go to SMAS customization. You can do back test, paper trade, live trade from here itself, and you can directly link your broker from the platform. If you come here, I will just show you broking details. Okay, so here you can link your broker and you can build strategy and trade from here. Even if you know how to code, right, you can go to code from scratch. Okay, and you can code the strategy here. You don't have to do any heavy lifting of calling an API, building an no initialization. You just have to come, you have to code the entry exit parameters and all those things here, and you can save the strategy and directly run it. And if you have our own documentation which you can refer to. So it will do all the heavy lifting for you, so you don't have to do anything else. If you are going to do everything from scratch, then that in that case you have to build your own dashboard to track trades. You have to connect with brokers API. You have to build execution platform and everything. So instead of that, you can use platform something like we have.
I
Hello.
think that must have
Uh,
solved your doubt. Yeah.
Yeah.
So, do we have any more questions on the floor, or shall we conclude? All right. So, thank you, sir, for delivering such an insightful and engaging session on quant finance. Our students must have got an entire new domain to explore. Now, I would like to invite Dr. Suryakant Gautam, Faculty Coordinator from Electronics Department, to deliver a vote of thanks. Over to you, sir.
Thanks, Priyanshu. Good afternoon, everyone. On behalf of Training and Placement Cell, MANIT Bhopal, I extend my heartfelt gratitude to Mr. Tribhuvan Bisen for taking us through the dynamic world of quantitative finance, where math, code, market converse to shape the future of financial strategy, and specifically for providing the insight in terms of career path to real world application of data science and machine learning applicable into the finance domain. And this session was really insightful and knowledgeable. And Mr. Bisen's clarity, passion, and practical advice have surely sparked inspiration in all of us. Thank you once again, sir, for sharing your time and expertise. We look forward to more such impactful session ahead.
Thank you so
Thank
much,
you all.
guys.
Yeah, Priyanshu, go ahead. Thanks.
Thank you, Gautam, sir. Tribhuvan, sir, do you have something to add on?
No, no, I don't have anything to add on. It was great interacting with you all, guys. I hope you find it insightful, and I did justice for your time. So yeah,
Definitely, sir.
yeah, okay.
So, yeah, that was it. That was the time for all of you. That was Tribhuvan, sir. You can follow him on LinkedIn. We'll be sharing you all the resources that he'll be sharing with us. And we are now officially ending this meet. You can all leave now. Thank you, sir, once
Thank
again.
you. Thank you.